Good morning and welcome to the Killik & Co market update. The MSCI World Index has hit a new record high, which is quite amazing considering how far markets dropped when all the tariffs were announced in April. Here's the 5-year chart. In the pink box, you can see the previous record high that was reached in February, then that market drop and then the subsequent recovery. However, last night Israel launched strikes against Iran, which was quite unexpected. And this morning, European equities are in negative territory, and it looks as though American equities will be down when the market opens this afternoon. As always, when there's tension in the Middle East, the oil price has risen on fears of supply disruption. Here's a 1-year chart for Brent crude. The price dropped in April, briefly below $60 per barrel, and that was due to concerns that the tariffs would reduce global growth and therefore the demand for oil. Following last night's strikes, the price moved up over $70 per barrel. A significant retaliation from Iran would likely cause further market movements, but Iran is in a weak position at the moment, and therefore there is a question mark over Iran's capacity to respond. We had some disappointing labour market data for the UK this week. UK unemployment has risen to a 4-year high. Here's how the number has moved since 2020. It rose from below 4% to 5.3% between early and late 2020. The furlough scheme prevented it from going higher. It's been on a steady upward trend since 2022, and it's moved higher a bit more sharply recently because the higher minimum wage and the higher national insurance contributions have made it more difficult for employers to employ people, and therefore there aren't as many jobs. We mentioned last week that UK inflation had risen to 3.5%. This week we had the latest US inflation figure, which had fallen to 2.4%. It was a surprise to have a fall, as the tariffs are expected to raise prices in the US. This chart is showing UK inflation in green and US inflation in pink. Just look at the divergence between the two at the end there. The higher inflation in the UK means that UK interest rates would likely stay higher for longer, and that's one reason why the pound has strengthened against the dollar recently. Here's a 5-year chart. The rate has moved from 1.22 in January to 1.35 this week. And lastly, 3 UK technology companies have received bids from US buyers this week. This might be a short-term win for investors in those companies, but it's a real shame for the longer-term development of the UK tech sector. We don't really have any big tech companies here in the UK, and one of the main reasons is that the companies keep being bought out before they have a chance to grow. The 3 companies that have been bid for are Spectris, Alphawave and Oxford Ionics. Spectris provides high-tech measurement instruments to companies in many sectors, including the semiconductor sector. Alphawave is a semiconductor company and Oxford Ionics is a quantum computing company. Oxford Ionics is a private company, but the other 2 are publicly traded. Their share prices dropped in the 2022 market sell-off, and they haven't really recovered to their former highs. So understandably, these US buyers are taking advantage of the low valuations. Here's the chart for Spectris. There's a spike at the end following the bid this week. And here's Alphawave. It had its IPO in 2021, which in hindsight was poor timing. Appetite to invest in smaller companies dropped in 2022 and it hasn't really recovered. So we'll be watching to see if these 3 bids are successful. Moving on to have a look at next week, we are expecting results out from Accenture. That's it from us. Have a great weekend, and we look forward to seeing you next Friday.